Without the China market, Australian high-ash coal has to compete for other low-end markets like Indian cement or take a discount to equivalent coal, Mr. Hope said. If China accepts no high-ash, less high-quality, thermal coal, other markets may not take it all. There have been no reasons given by the Chinese government for the decision. While some pundits say it is due to diplomatic tensions, others say China is merely trying to limit low-quality coal and support domestic supplies. A Shanghai coal trader told Zinder Marine News they have stopped ordering coal from Australia because of the ongoing uncertainty around the port restrictions. Glencore, Peabody Energy and BHP have been pegged as the miners most likely to be impacted by any ban or restriction of Australian coal. While Glencore and BHP are both exporters of coal through Dalian, Mr. Hope said BHP would be hit hardest by a ban, particularly at its Mount Arthur mine in the NSW Hunter Valley, which is already facing declining coal quality. Loading, BHP would certainly be hit. Mount Arthur coal mine exports 8 million tons of high-ash thermal coal to China and has no other mines to blend its lower-grade coal with. Mr. Hope said, Glencore is unlikely to be caught out. They can blend their way out of it, combining their lower-quality coals with higher-grade coal. BHP and Glencore were approached for comment. Peabody was unconcerned. Peabody hasn't been affected as of yet and continues to monitor the situation, recognizing that China accounted for less than 2% of our sales volumes in 2018. Peabody Senior Vice President of Investor Relations Vic Svec said. Macquarie analysts also singled out the New Hope Group as at risk due to their lower grades of coal. However, Mr. Hope said it would have less impact. A New Hope spokesman said while the company does have exposure to the Chinese market, it has not seen any impact of the decision yet. New Hope shares dropped 3.5% following the announcement from $4.23 down to $4.08. Macquarie analysts believe China's reliance on Australian coal would quickly end any bans or harsh restrictions. Coal stockpiles at Newcastle's Kooragang Island may start to grow if Chinese import bans continue. Credit Max Mason Hubers, with Australia exporting around 23% of China's import requirements, a total ban seems unlikely, Macquarie Securities analyst said. This was supported by NZNA analysts, who said they suspect it is a short-term restriction by the Chinese government to raise domestic coal usage. CBA analysts added, we don't think a Dalian customs ban or a China-wide ban on Australian coal would be sustainable beyond a few weeks or months. Mr. Hope said while restrictions are unlikely to be indefinite, Australian coal prices are already falling. Australia's top-quality thermal coal currently goes to Japan and South Korea and is valued at around $88 a ton, and is already sitting at 19-month lows. Mr. Hope said Australian lower-grade prices will sag, adding, we can already see Chinese and Indonesia prices start to rise. Wood Mackenzie coal analyst Yu Jai said, we expect Australian prices, particularly for premium and second-tier hard coking coal, would come under severe pressure as Australian exporters look to sell excess coal into other markets.